To get it started, guys, I'm Ryan Huntsman. I'm with Chicago Title Company. We are the transaction company closing on the title and escrow. And we really are a great bellwether for what's happening in the market. We see the transactions, we see what types they are, we see what assets are trading, and we see the financing rates. So we get some really great opportunities to see what's going on in the market in real time. And I'm happy to report this has been a really long time to have us held down. I don't have to tell any of you guys, there's a whole ecosystem of us that are related to transactions, whether you're on the appraisal team, the engineering team, the loan broker, the real estate broker, the title guy. None of us are earning a living when transactions are not closing. So we've been feeling it on our end, just as you guys have as well. And we've been eagerly looking for signs of any sort of recovery. And we are finally starting to see them. We're starting to see refinance transactions. We're starting to have our customer service team get busy again. So these are great little signs to us that business is picking up. And the last year and a half, I'd say, really most of the transactions we've seen are kind of forced transactions, which were in this owner-user world, where a guy's been making widgets in his office for 15 years, and he finally gets the opportunity to exercise his first right of refusal. So that's kind of the forced transaction that we're seeing in the owner-user world, where the guy finally gets to buy and he's reaching out to his SBA lender. So, that's a great segue into our SBA lenders in the room, because knowing this was going to be an owner-user discussion in room, majority of the people in our room focus specifically on that. And this is going to be a great opportunity for the rest of us to learn the difference between each of these guys' platforms and see how they work amongst each other. So with that, why don't you get us started, Randy Jones with Spectrum Commercial.
Thanks, Ryan. Boy, gee, it's good to be back on Zoom. Reminds me of the battle days of 2020. But let's not go there. So at Spectrum Commercial Lending, we finance and refinance owner-user loans, specialize in SBA 504 loans. Gosh, we like owner-user loans probably as much as the ladies of the View like talking politics. But you know what? We're good like that. We like that meaty B market. The ones that are a little bit more difficult to get done, whether it's tight cash flow, tight debt coverage ratios. Heck, we could go down to 0.7 to 1. That's right, I said it, 0.7 to 1. Personal credit and ethic challenges. We don't judge our clients, and we don't judge our deals because we're a bunch of libertarians. Ryan, are we allowed to talk politics in this room, or are we going to get demerits? Well, either one. I just said it, I guess. So Arnie's going to come after me. Interesting and even unpopular property types. We'll do automotive centers, restaurant properties, adult daycare centers, gas stations, car washes that identify as gas stations. We'll do them all. Basically anything but hospitality and raw land. And not so popular areas. We'll go down to Hemet, Chula Vista, Red Bluff, Stockton. Now, we can't do a loan for the Royals in London, England, but we can do a gas station loan for an owner in New London, Connecticut, who's a royal pain to deal with. We have a national platform, and if there's a business involved, we can usually go up to 90% financing, and our sweet spot are loans between $500,000 and $2 million. Remember, there's no such thing as a small deal, only a small lender. So what's trending? What's trending with us? Well, whether you're on your X speeds or not, I'm going to tell you right now, we're continuing to be fairly busy for this time of year. People are just doing stuff. They're either buying their buildings, their leases are up, and they're finding that their lease rates are increasing, so they're opting to buy. We're also doing a fair amount of refinancing, either out of bridge loans, hard money loans, or 7A loans, and it's because interest rates are still high for prime. We have a very easy program for equipment and tenant improvements up to $150,000. and you know, a little bit more complicated for up to 500,000. And lately, we've also been seeing some of these lean A loans that are finding their way to Spectrum Commercial also. But alas, it just seems like those meaty B markets seem to always come our way, much like much like a tomcat that's been gone for 6 weeks. It finds its way back home. Lastly, don't throw those deals overboard because of lack of liquidity for a down payment. We can work with we have actually a down payment assistance program that goes up to 5%, so they can do 95% financing. Just give me a call for more details. Well, I got to tell you, for a Zoom audience, you've been better than average. Can you stop by my 3D printer, and I'll get you over one of these tchotchkes or two from Spectrum Commercial Lending. Randy Jones, thank you.
Thanks, Randy. Arnie just sent me a virtual hook to see if I could hook you off the stage. So good timing. Um, let's get to real quick to take a break from lenders to one of my fellow vendors, Jay. You guys lit your hair on fire when I did right after COVID. We just were all gas, no brakes. And then all of a sudden we hit all brakes, no gas. What's your guys' world looking like right now?
Yeah, we certainly felt those pains, you know, hiring up for the unprecedented demand and then suddenly dropping off a cliff. But, you know, the first half of this year has been great. Like you said, we've seen transaction volume pick up. I mean, you hear it all the time. There's a ton of dry powder out there, right? And so, you know, it's the capital markets and the financing that's a bit of, you know, a funnel here that's reducing the deals. But, you know, partners in a full service, environmental, engineering, and energy consulting services group. We operate across the country. You know, in this owner user space, you immediately think SBA. You know, whether it's environmental or construction lending, we provide services that can help our borrowers and our lenders get these deals through the SBA. You know, one thing that's important to note is the SBA has very prescriptive requirements in their SOP for certain product types. And obviously you want to work with a consultant that, you know, has people focused on the SOP, understanding how to get some of these squeakier deals through the committee there in Sacramento, has relationships with some of the folks in Sacramento. And so here at Partner, we have a whole group that's just strictly dedicated to, you know, SBA and understanding the SOP and helping our clients, you know, guide them through any potential issues. We have seen, you know, maybe a few more screen outs on the environmental side than we're used to seeing. It seems like the SBA is being a little pickier, but then the appeals process has been, you know, pretty straightforward. Every time we clarify some language or get something through the appeals, it doesn't seem to be problematic, as the folks that are looking at the appeals are a little more sophisticated with respect to understanding those environmental issues. So that's it. You know, we've been busy. We've had a great first half of the year, a great second quarter. You know, we'll see if we get the typical little summer slowdown. But, you know, as Ryan said, we're a pretty good barometer for the industry. And, you know, we're pretty happy, you know, with the activity that we've seen this year compared to last.
That's good to hear. Thanks, Jay. And just a quick shout out to you guys. I refer Partner Engineering probably on a weekly basis over here. As soon as somebody wants extended coverage or they want a survey endorsement, sometimes those decisions are made a little bit too late in the game. But having Partner Engineering as a national firm that can jump on the thing on our, you know, surveys, zoning, environmental really quickly, they seem to outperform everybody on turnaround time. And as things get busier again, the winner is going to be whoever can agree to the shortest due diligence. And that's another sign that things are coming back. And Partner and Jay have always been great for that. So I urge everybody to give him a holler.
Yeah, thanks, Ryan. Appreciate that. I mean, we're engineers who understand your business, and we really do kind of live by that. So when we understand the deal, we're able to be better risk managers, and we certainly understand that you don't want to have to extend a due diligence period and be subject to rate changes and stuff. So we're going to work hard to get things to you when you need it.
Yeah, if anything, give them a call just to get invited to their party. They're usually one of the better parties. Let's move on. Let's hear from Peter. We want to hear about your new platform and how it is outranking your old gig.
All right. Well, it's a pleasure to be here with everyone. It's great to follow Jay because it seems like everything that gets in the way is environmental these days. So you're always sitting on the edge of your seat waiting for that report to come in. Everything else signs out except for the environmental. So very important to get ahead of that. So thanks, Jay, for sharing that with us. So CP Funding Advisors is, essentially roughly just a brokerage, but what I've decided to do is, I've been in banking a really long time and probably hold various roles and have been exposed to executive management teams across. And what we focus on here is, customized lending solutions just across the board. There's a lack of it in the market. I'm sure everyone here would agree that there's not just one place that can really accommodate a client across the board. So with my last role, at Genesis, running the commercial division and teaming up with executive management and other divisions, I started to realize there's a huge gap in the market. And that gap is clients, brokers, other partners have been kind of left behind. And there's a lot of deals that just sit that should get done. So I decided to take my expertise and structuring deals, customizing any type of lending, or honestly, just any type of banking or finance need is really what we're about. We're broken up in, really 4 different ways. A majority of the business is I have special relationships on the lending side that are exclusive to CP Funding. And the direction that we drive is basically being the direct lender for these banks that don't have a sales force. That's one piece of the business. The rest of it is brokerage, business finance, consulting. It's a little mixture of everything that clients need. So, we've been around now a month. We have a staff of 2 or 3, and we're continuing to grow and filling our way around. But the easiest way to describe it is if you're struggling with any type of loan, whether it comes from title, environmental, and how all that fits into lending, you could come to CP Funding and, we can advise also. We don't have to lend on the deal. We're broker friendly on certain deals, and I'll be transparent as possible with everyone. If there's an opportunity for me to help guide you to the right lender, there doesn't need to be anything in it for us. Our goal is to service, the finance market with whatever type of deal is out there. But really, look, we'll do owner user is the specialty just because there's so many moving parts and deals really fall apart and they're not as customized, as, multifamily or some of the other types of loans. But we have contacts across the US. There are some people on this call here that, we'll work with. So reach out if you're a lender, reach out if you're, a partner or even a broker. We work with everybody. There's some kind of capacity that we can work together. So really excited about the new opportunity. And as everyone could probably agree, banks are really tanking things these days, and the management teams are just not paying attention to it. So all of us that are on the front line are feeling the pain. Our partners are feeling the pain. And these are deals that really should get done. It's just people aren't presenting them or structuring them properly. So customized lending, CP Funding Advisors, give me a call. My number's here. You'll see more to come as the months come on. So thanks for your time.
Awesome. Just focusing on lending. No more worrying about households or deposits, right?
I'm still doing a little bit of that, but not as much. Clients still need help with cash management and structuring. Banks are still taking advantage of clients. So help. Just consider me a banker that's a broker. How about that? It's the easiest way to do it. But yeah, I don't have to worry about the deposits as much.
Awesome. And thank you for number one. A lot of fingers get pointed at title and escrow when there are problems. It's so good to hear that your problems have all been from the engineers, and Jay in particular. Anytime we have a problem over here, I'd like to blame Jay personally.
Easy place to blame. Nobody knows about it.
Glenn, Glenn, tell us about Harvest. We haven't even gotten to discuss this, but I have a long time affinity for Harvest, going up to their managers, a lot of their BDOs, that the fact that they brought in their own escrow, with some really great tenured folks that are well known in our escrow world. Big kudos to Harvest, and watching Harvest grow and what they've grown to now has been really awesome. So we're all looking forward to hearing from you, Glenn, about your programs.
Okay, great. Thanks, Ryan, and great to see everybody this morning. It's fun to be here and always connect with people. So, yeah, it's really amazing. I mean, Harvest has done a great job of growing over the last 8 years. I think this summer is my 7-year anniversary at Harvest. We just funded a $218 million securitization, which helps us recycle our capital and gives us a lot of liquidity to continue to do a lot of business. We had 2 big record-breaking months the last couple of months. Last month, I think we did about $85 million in loans that we closed in that 30-day period in May for about 65 units. So we're really cranking deals out. We've got an amazing group of people that we work with. It's actually one of the best things about working at Harvest is just the team that we have and all the professional people, and everybody's just so focused on just doing loans, because we're not a bank. So we're just doing loans. That's the only way we make money. So, I mean, we're really focused on owner users. It's really our specialty. I've been in SBA my whole career, basically 20 years now. We do have a wholesale program for A-paper. That's a good product. It's a 504 program for A-paper, and then direct through Harvest we do B, C paper, mostly bank declines. I could really relate to Peter. Love to connect with you, Peter, because I think we could work together. I specifically specialize in the tougher, more complicated files. I've always kind of gravitated to them because there's less competition and better pricing, and people, really need the help. A lot of times we'll get, bank declines that are in escrow, and there's a timing issue, and people can't figure out how to get the thing structured. I work with different partners like bridge lenders. We can broker through Harvest bridge loans if there's a timing issue or a structure or eligibility issue. We've got a working capital partner if there's working capital issues. I'm working on a couple working capital loans right now up to $350,000, where the borrowers just can just come in with barely scrape together the injection, but they need some working capital at the same time. So I'll help them put that together. So all unique types of structures, including some TIs. We'll do TIs direct through Harvest. One of my bridge lenders is funding a construction bridge loan for me right now that Harvest didn't want to do. So all different types of creative solutions. As far as property types go, we're doing a lot of different property types. I mean, we really love and get super aggressive with the general purpose, office, industrial, retail. Of course, we love the warehouses, the distribution centers, but we're also doing hospitality. I had lunch with our chief credit officer about a month ago, and I was surprised when he said we have a lot of room in our portfolio for hospitality. We got a bunch of hospitality leads, but for whatever reason, we didn't close all of them. So we've got room for hospitality. We do assisted living, working on a big assisted living deal right now. I personally do a lot of restaurants, auto repair, contractor yards, that are basically dirt. We can do those as 504s or lower LTV 7As. And then we have our direct conventional product, which is for owner users. I call it our SBA lookalike product, conventional product. But the thing that I love about it is it's conventional, so you don't have all the SBA rules. I mean, we all know that SBA has the SOPs and all the crazy rules. You got to check all the boxes. So the conventional product will go down to 20% owner occupied, which is sometimes comes up as an issue with 7As or 504s. We'll do cash out on all of our products, including the conventional. The conventional is more lenient with cash out, although believe it or not, we do a lot of working capital and cash out with the 7As and the 504 programs. That's also been a big part of our business. I mean, getting cash out is always tough with the banks. So that's usually a deal that we're really not going to have too much competition on. But really just the purchase and the refis. We do a lot, like I said, the cash out refis. And then as far as our timing goes, it's unbelievable. I mean, right now we're really busy, so we don't want to push every deal through as a rush because the back shop's just pretty overwhelmed. But we just set up a one like few people in our back shop, actually a couple of our most senior people in the back shop to work on rush deals. So if we have a rush, we have a system to get it through on a rush. And I can literally take a file to, right now I've got a bank decline and the contingency is coming up. So I got off the phone with the broker yesterday and I said, okay, I'm going to send the file. There's 2 deals. I'm going to send the file directly to my chief credit officer. Fortunately, they're already approved by SBA and we have the authorization. So it makes it extra easy for us, but it's not required. I can send a file to my chief credit officer and he'll go through it, look at the file and make a decision if we're going to do the deal. He will physically, literally generate a commitment letter and signed by our chief credit officer so we can get the deal off the street, keep things moving, maybe buy some more time to close, do whatever we have to do. And then at the same time, send the file into our underwriting department to have the write-up done and everything. So as far as timing goes, because we do bank declines and of course our pricing is higher than the banks, we got to be quick. So we have systems in place to move quick too, combined with the amazing support staff that we have, the people that we've recruited and that I've been working with for a long time, that I've worked with. And a lot of these people have been working together for 20, 30 years. It's really feel fortunate to be at Harvest. So if anything comes up that falls into any of those categories, love to work with you guys, and we got a great system to get deals done. So great to see everybody and fun with Harvest, and hope to talk to you guys soon.
Thanks, Glenn. Covered a lot. Appreciate it.
Thank you.
Our last 2 on our list that were supposed to speak today were Barry Judas and David Ware. Neither were able to make it. I'm not sure if they're out playing at the beach, enjoying the holiday, or if something came up, but we'll be sure to have Arnie flog them appropriately afterwards. I know we just have a couple more minutes in our rooms before Arnie brings us back, I believe, into our waiting room. Are there any questions or comments from anybody in the gallery who hasn't gotten to speak yet? We'd love to hear from you. And if you have any questions for myself, Jay, on anything environmental that's troubling you, or on your loan, you've got access to some great trades right now.
Oh, there we go. Hey, you guys. Randy, I was just curious, and a couple of you guys were talking about hotel motel. I get calls for it all the time. We don't do hotel motel here. Just wondering what kind of hotel motel deals are getting done, and who out there is doing them? Is it like Live Oak Bank? I heard, are they doing them? And what banks are actually active in that? I get asked that question a lot.
Well, I think I can steer you right now. Glenn's doing them. I don't know if Glenn's doing them as a 7A or a 504. But
Generally they want 504.
Yeah, it's very selective. But I'll let Glenn go ahead.
Yeah, we're doing hospitality. Actually, my junior guy who I trained and is kind of a junior BDO, he gets some of these leads, and he closed 2 deals recently that I was surprised he got done. In fact, one of them I told him I didn't think we were going to do, and he went and figured out how to get it done through our system. And one was a bed and breakfast in Napa. It's like a 10-room deal. And then there was it was non-branded, everything. The bars were pretty strong, but then there was this other one in Julian, which is in San Diego, kind of that little Apple town, which is really rural, and it was a non-branded, kind of like yoga retreat hotel kind of a deal, which I was really surprised that we did that one too. As far as cash flow, I would say I'd have to double check on how aggressive we're going to be with projections, unless there are some really good mitigating factors. And before COVID, I personally did a big projection based hotel. It was a Ramada in San Diego, or the Ramada in San Diego down here in National City. It was a really big one. And it was projection based, but there was a big mitigating factor. These guys, a pretty wealthy family, and they had a 3 million in cash post closing liquidity, you know. So I think we will look at every deal individually and, you know, make a decision if we think for Harvest a big, because we're doing the more aggressive deals generally, you know, as a direct lender. So we've got the equity, or we've got, you know, good post closing liquidity, or some mitigating factor that, you know, we think that we're going to be able to get out of the property. Hopefully, I mean, we don't want to have to foreclose, but if we have to, you know, in that case, that 504 we did was, you know, we didn't want to even do the second because there was a big PIP on it. So we brokered out the bridge with construction. So our LTV, you know, was low because we just did the first. So, and I think those other two deals I was talking about, the one in Julian and Napa, those were probably 7As. So, you know, we'll look at every single deal and see if we can figure out how to get comfortable with it. And generally we're just aggressive, so we'll do a lot of deals that other people won't.
So what is your 504 first look like on pricing wise? And what's kind of the competitive itch there? You just get the deal done, or you've got better pricing, or you'll do projection. I mean, what is your stick on that one? Your sales?
Yeah, I mean, our pricing is going to be definitely higher than the banks, you know.
Yeah.
Probably, you know, a little bit lower than private money. I mean, we're in the 9s and 10s generally, I'd say. I think on the cleaner kind of multi-purpose cash flowing deals, we can get into the 8s on a 504 first. But we've got little kickers for, you know, like park, you know, little add-ons to the par for projections, special purpose kind of stuff. But it's nice is we actually have, they just rolled out a few different options on our prepays. So actually I get those two deals that are rush. One of the benefits to the guys, we got a 3-year prepay, where our competition was a bank that had a 5-year step down or a 5-year flat. We have a 3-year step down with the 20% payoff option. And we charge a little bit over, you know, a little add-on to the par for that too, to get the better prepay. So yeah, I mean, our rates are, we don't, you know, unless we go through that wholesale program that's more like A minus paper, it's going to be more competitive on rate. But our direct programs through Harvest are we're not really competing on rate that much. Although in our space, I don't want to bring up one of our direct competitors, but they in our little niche, we do have pretty good pricing because one of our direct competitors priced out.
Are you talking about Celtic?
You know, Celtic, I wasn't thinking about Celtic specifically.
I know Celtic's got a neat little niche there. They'll do basically construction startup on hotel motel, which I just think is amazing. They've been doing it for years, and apparently they're paying. It surprises me.
Yeah, that's true. They do ground up because I'm buddies with Hangover that we used to work at Wells Fargo together. Yeah, they'll do ground up construction, hospitality. We don't do ground up. We're not big in construction. We do TIs, but we're not a huge construction lender. We do some TIs on our 7.
I totally get that. It's tough, and you know, you want to get it done and move on to the next deal. You know, those deals drag out for 2 flipping years.
Yeah, I know. It's a good news, I guess, if you can get a big pipeline going. But
what about Live Oak? Are they doing anything over there? I mean, they're always at the top of SBA lending. What do those guys do?
Well, Live Oak actually is funny because one of the recruiters reached out to me, and I was just curious to talk to him because just a lot of my friends from Wells Fargo went over there, but I never run into them in my business here at Harvest. And so what I found out was that I talked to one of the senior people over there. They said that their deals have to cash flow, so that's why I never run into them. Which, you know, I personally like projection-based deals. It's always been a big niche of mine. So I don't. They might have a vertical, you know, that just for hospitality. I'm not sure. I just really don't run into them that much. I don't know. Maybe Randy does, but I know that that's one thing with them. They got a cash flow, so it's a different.
I never knew Live Oak was doing anything but hard money loans, but this is news to me.
Oh, okay. Yeah, I mean they do SBA and stuff.
Yeah, they're a big SBA lender.
That's probably why I don't run into them.
Yeah,
not Lone
what
Oak.
you just said.
Live Oak Bank.
Oh, I'm sorry.
Yeah, Live Oak out of North Carolina.
I'm rarely running into them. Yeah.
Yeah, they
Yeah,
do a ton of stuff over there. I was just wondering if
Randy,
anybody
let's-
had worked with them.
What's that, Scott?
I just wondered if anybody ever worked with them. They're always at the top of the SBA list nationally, and I was just wondering what are they doing over there? Because I don't really run into them much either.
Yeah, I think if you're not doing, cleaner deals that cash flow, you probably won't run into them. I think they have a good model with their verticals. So from a marketing standpoint, I think they've got a
Mhm.
good, a good business model. So I think that's why they get a lot of business. But yeah, it's a different niche. I personally wouldn't ever want to go back to
Yeah,
straight
okay.
paper stuff.
Mhm.
Any
Well,
other
here at
questions from
Flagstar,
that?
just to touch on what we do here in Flagstar, we're basically general purpose property. We got a great 504 program, generally 2.38 over the 10-year fixed on our 504. But we're general purpose, and we want at least one tax return here at cash flow. We're not doing any projection.
You guys are a bank, right?
Yeah, with Flagstar Bank. And we've been around a bit lately. We were Signature Bank, then New York Community Bank, now we're Flagstar Bank.
Oh, okay.
Hey, Scott, I do a lot of hospitality with Open Bank. They do a lot of motels.
They do?
Yeah.
Yeah, I've heard that. It's funny. I just
Jay, what bank was that?
Open Bank, Korean Bank in LA.
Yeah.
I was gonna comment, we have a national hospitality division here, so I get to see a lot of hospitality transactions in particular. And we've been seeing Poppy Bank, State Bank of Texas, and Bank of India pretty active as far as banks. Outside of that, certainly not many banks. And one other little perspective wanted to add, I don't think anybody in this room offers it, but a majority of our larger hospitality transactions I'm seeing is C-PACE loan as a part of the capital stack. And for anybody who's not aware of that, the Cliff Notes version is if there's anything that's being financed for green windows or upgrades, or when you're doing a build, that can be written off as an environmental benefit, that can fall under the C-PACE category, and that can be added to the capital stack on top of your bank. So I am starting to see quite a bit of those going. I would say hospitality, had that little blip at COVID when retail did and restaurants did, but ever since then, hospitality has been moving forward pretty strong. Any other asset classes out there that you guys are seeing? Like I mentioned that we're seeing the owner user, the guy who's finally getting to exercise his first right. We're seeing a lot of hospitality. We're finally starting to see a lot of build for rent transactions come through, which people have been talking about with our with the lack of housing. Any other asset classes that any of you guys are seeing more and more frequently?
That kind of, unless somebody has something, I have another type of deal that I could throw out there that I'm looking kind of for a home for. I don't know.
Please.
So yeah, this is kind of a weird one. It's a big custom home kind of property in Temecula wine country. It's actually broken construction. They want to use as an event center. I don't know if any of you guys are familiar with Temecula. I used to live out in Marietta, so I know that there's an amazing business. I mean, there's amazing demand out there for those types of venues. But the problem with this property is it's just going to be the biggest, most extravagant, property in the whole area. There's not even that many. There's really no good comps even really for an as completed value in Temecula. You have to go to Rancho Santa Fe in San Diego or La Jolla or out to the desert in those fancy neighborhoods in the desert or something. So and it's broken construction. So it's a very, very tough deal. But they are looking for a construction loan. The bar does have, there are some mitigating factors. The bar does have good amount of equity and some other land out there that he's willing to sell, uses additional collateral, sell for liquidity or contribute to the project. So, and you know, in the CDC that I actually got the referral from, you know, they're potentially going to work on getting an authorization. So there could be an SBA takeout there as an exit for the construction lender. So if anybody knows any aggressive construction lenders that can get really creative, that's kind of what it's going to take. It's a good size one too. So.
And
How
Ryan,
big?
I'm seeing lately also more gas stations. It's now that we're doing them, I guess maybe I'm out there looking for them, but it seems like there's a lot more coming our way.
And car washes.
Yeah, yeah. I mean it's you know, and or just standalone with a C-store.
Keep Jay busy.
But
So
we're
Randy,
looking.
do you guys do equipment? Do you take the equipment as collateral for the car washes?
Yeah, we can, yes. Yeah.
And you guys just do those as you guys are just basically 504s or 7As or 5.
Well, we're doing them as 504s.
You're doing 504.
Yeah. And we also just did one as a conventional. I mean, there's a gas station as a conventional.
I gotta remember you for car wash because you know, Harvest is really just real estate, so we don't take equipment collateral. So I think it kind of boots us out of the competitiveness of car washes, but sometimes I'll get a lead for those.
Let's talk, my good friend. Let's talk.
Yeah, for sure.
On your Temecula property, is there a new construction contract in place? You mentioned that priority had been broken, or are they kind of gonna pay off all the old contractors and start over, or have they picked up pace? Where is it in the construction process?
Yeah, so it is mid-construction. They put about 3 million into it, and I've met with the contractor, and he seems pretty you know, experienced out in that area. He said that there's no mechanics liens or anything. You know, we'll be able to get clear title. I've done that a few times, you know, over the years where it's broken construction. You got to get the title company to indemnify and jump through some hoops to get a clean policy, right? But I don't think that's going to be an issue. Everything seems like it's all paid up, and so there's already some value in there's actually an appraisal that's got as is value of almost 7 million. There's been some work done. He's put about 3 million of construction of 3 or 4 million of money into the property, and he bought it 10 years ago. So there's been a lot of appreciation there too.
Cool.
Glenn, what's the request? What's the dollar amount?
So it's he needs another, just so you guys know, I do have another bank looking at it, but who knows if they're, you know, going to get serious or not. They need about probably another 6 million or so with fees and contingency and everything to finish. And there is an as completed appraisal for 17 million, but I mean, you kind of discount that. I mean, everyone that's looking at that is because I even have a bridge lender looking at it. He's like, well, I'll discount that 17 to 10, you know, because there's really no comps out there, you know, good comps. So if you're at like 60% maybe on 10 million, you'd own 60. Actually, the bridge lender is willing to go in second up to 50%. So maybe the borrower would come in with a little bit of cash, maybe $1 million, sell some land. Some of his other property comes in with another $1 million. Probably needs to put some post-closing liquidity in the bank. And then maybe a construction lender would do like 3 million or 4 million on the first. And then my bridge guy would do $1 million or 2 million in second, actually, if he can keep it down to 50%. So there's different options that we're looking at. But yeah, I mean, it's a pretty decent size. I think there's, you know, some good pricing. It's a good pricing opportunity with some points because I don't know, it's not an easy deal to find a home for.
Right on. Thanks for all the info on that, Glenn. I think if we asked Dave at New Day, he would tell you that all good things are worth the wait. So notice that he just logged in and is part of our original group. Dave, do you want to give us a little bit about New Day and your platform there?
Yeah, sorry for the delay. Had some childcare issues this morning that you know, now just allowing me to get on. But so yeah, just you said a breakdown on kind of New Day, what we're doing, and types of stuff we're looking at.
Yes, please.
Yeah, so I mean, New Day, we're nationwide, obviously non-bank direct lender. Um, really three major products right now, and we're kind of expanding that portfolio out a little bit more. But you know, a lot of SBA 504 owner user stuff, a lot of conventional. We're using their conventional product for a lot of refis. 30-year fixed, fully amortized product. Interest only options available on that. But and then surprisingly, with our investor product, we're actually getting a lot of traction on as well. Even though with the higher rates, you know, on those deals that are penciling out around 55 to 60% LTV, with our kind of hybrid prepay buy down, we're getting a lot of people using it as kind of a short-term bridge option with a little bit more stability on there. So, you know, if we can be, you know, we'll overcome vacancies, we'll overcome some of that hair on the deal. Maybe they're working to try to get it stabilized. Their current bridge loan is expiring. They have extension fees or a balloon payment. We can do, you know, a 12 or 24 month prepay around 10 to 10.25% on a 30-year AM. And then they can kind of, you know, not have to worry about a prepay or a balloon payment or anything like that once it's open. So we're actually getting a lot of traction with that investor product recently. But yeah, just staying aggressive in the market, 504 conventional and investor.
Awesome, thank you. Right before you joined, we were commenting on what asset classes we're seeing become more and more popular. Glenn mentioned that they had started to look at more hospitality opportunities, and Randy had commented on gas station, and I've noticed a little uptick in car washes.
Yeah.
What are you guys seeing at New Day? I do remember you talking about a mobile home park, which was unique to everything that was mentioned today. What else are you seeing?
Yeah, so I mean, we currently got a mobile home park that we're running right now. It's an investor deal. It's, you know, it's 70% occupied. It's in Cedar Rapids. It's kind of a dicey deal, but the way we underwrite it kind of fits our box, and you know, the market cash flows on mobile home parks work. So we're looking at that, but yeah, we're getting inundated with that tricky stuff. The hospitality is a big one. With hospitality, we want to go 504 on it. Generally, we want it to be somewhat in a populated area. Same thing, gas stations are big, and then car washes. We're just getting a lot of that special use properties because it's not really going anywhere else. So a lot of our referral partners are just looking, you know, for the non-bank direct lenders to do some of these riskier deals.
Awesome, thank you. We did have one question in our chat, but I think she's left since then. But you know, in case there's anybody else who didn't want to ask the question, somebody had asked, what's the 504 program? Does anybody want to jump on that and give a quick little SBA lending 101 for anybody who's new to it, and maybe help them understand the difference between 504, 7A?
Well, the 504 is a first trustee that is around 50% where the you know, with the either the bank, the non-bank, or the, you know, it's the first trustee and lender, and then behind them comes a 40% loan that's done through the SBA, through one of the nonprofits. I think there's probably about a dozen of them in Southern California, and so they come in behind as the 40%, and then the borrower puts in 10%. Second trustee is there, you know, not just to provide for great leverage, but to create jobs. And you know, as it turns out, they tend to be investment grade. So if it's a pretty popular program, so it gets up to 90%. Whereas the 7A is 75% guaranteed by us as the taxpayers. And if you put down, if it's just a subject property, you have to get additional collateral. If it's 90%, if it's 85%, then you don't. And a lot of the time it's variable rate based on the prime rate. There are some programs that have fixed rate. Some lenders do, some banks actually have them. But in a nutshell, that's it. And I'm sure my good friends want to, and kind of fill in the gaps there.
I've heard in the past, and hopefully my ignorance is helping anybody else out here. Is one program specifically better for something like inventory and employees and equipment, and then the other one is more appropriate for your business startup or your real estate financing?
Yeah, I was going to say the 7A is more for startups. More, it's a general loan. The 7A is, and the 504 is probably meant more for borrowers that have been in business for a while, and it's just basically meant for equipment and commercial real estate. 7As, and again, I'll let my 7A lender friends talk about that a little bit, but 7As you can get working capital, and so for instance, you could do a commercial real estate loan for, let's say, up to 85 or 90%, and then you can come behind it and maybe do a working capital for another 10%. So it's much more structured for that type of thing.
Thank you. Appreciate the remedial explanation.
My good friend, any questions you have, Randy Jones, Spectrum Commercial Lending.
Awesome. A little bit earlier, we were talking about hospitality. I just wanted to share with everybody, us as the title company, we're salespeople, just like a lot of you lenders, and we're always trying to find opportunities. So reach out, let me know if you have any needs for data and, maybe finding some opportunities, because I'm constantly scrubbing lists of hotels with debt coming due. That's a perfect group of people to call and ask them, what are you going to do when your debt adjusts? And, sometimes, that list we pull it from origination date. So some of those people say, yeah, I've already refinanced. But then all of a sudden, while you're on the phone with them, they say, oh, but I have this gas station or car wash over here. So, I try to keep to dialing just to keep as a good salesperson and keep my business growing. So if anybody is ever interested in, trying to find some lists, there are really great data services that a lot of us have access to, especially with a lot of CMBS debt coming due in hospitality right now, distressed assets. There's some pretty good lists that you can pull just to find, 10 qualified people a day to have great conversations with about what you do. And you'd be surprised to find that people start talking about other assets than the one that you even called to solicit about. So anyway, let me know. I've got a lot of great representatives at our title company that help to gather those lists that they use for their own business generation. They'd be happy to share with you guys.
And if I may add, Ryan, you guys got a great escrow company, great back room, great escrow officers over there that, especially even for bulk sale, it's from personal experience, fantastic back room.
Appreciate that. In fact, Randy, so I'm glad you said that. You brought up another great point. We were talking about hospitality transactions. Another thing that we're seeing quite frequently is different allocations on the purchase prices. And that's something to be conscious of when we're speaking with our owners about acquisition financing, right? There's a lot of things that can be written off as personal property and not as real property. And that's going to have a big effect on the basis for taxation of your seller, as well as the basis for your buyer coming in on the taxes he's going to have to pay forevermore. So, I would say to really keep conscious about allocations on your purchase prices when you're kind of drafting your loans on your hospitality acquisitions. And I'm glad that's, your comment about bulk sales brought that right to mind. I'm sure you hear that a lot. Glenn, since you are pretty active in the restaurant space, right? You've got to deal with bulk sales. You have to deal with ABC, right?
Yeah, the transfer of the license, yeah, is something that it has to get done, before somebody can take over, or we can fund something like that. And the bulk, Harvest actually just specializes in real estate. So for business acquisitions, sometimes we'll team up with some, another lender that'd be interested in just doing that piece of it. Or sometimes if there's not that much value in the business itself, we just maybe try to have them increase the purchase price for the real estate, hope it appraises, in a market right now where I know there's some downward pressure on values, but depending on the location, the specifics, sometimes it'll, you get a nice appraisal in and just do the real estate, which makes it a lot easier. The bulk sales. I've done bulk sales over my career. I used to do a lot of them when I was at Wells Fargo, and they're doable, but it's a whole nother project.
Yeah, it is a whole nother beast. And, we really just see it mainly with hotels and restaurants.
Yeah.
Before we sign off, Jay, love to hear from you just a little bit on retrofitting. I remember years past, we had issues with seismic retrofitting on soft structures on apartments. And I recall kind of recently, Jenny having some conversations about retrofitting that's still mandatory or going on. Can you give us just a couple minutes on that before we break?
Sure. Yeah. I mean, a lot of the major municipalities, Los Angeles, San Francisco, kind of kicked off these mandatory retrofits, particularly for soft story, which mostly is multifamily, but can include some retail with some big, glass openings in the front. And other municipalities are just following. So it really depends on your municipality, but smaller cities, like, it sort of took the well to break, and now all these other smaller cities have their own soft story retrofits. I've been getting some calls just recently for Oakland, who started implementing one, and so it's really municipality specific on whether there's kind of mandatory retrofits. And then outside of soft story, now that was successful, some cities are looking at other kind of problematic buildings to start mandating retrofits. So the building stock is getting improved, and as one particular building type might get improved, then they could potentially be moving on to others. So I think you might continue to see some mandatory retrofit requirements.
Thank you. I bring that up for you BDOs and loan officers here. I've seen some pretty good calling campaigns, both by my title people, salespeople under me, as well as loan officers who get in touch with the engineers and find out about these retrofitting mandates, and then figuring out the area and the municipality that's going to be mandating it, then getting a list of all of those owners that fall within that area who are going to have to make these retrofits. They usually don't have the cash on hand to come out with that. So they're typically going to need to lever their asset and get a loan from somebody like you guys. So, I kind of throw that out there as maybe a good marketing idea to reach out to Jay or one of your reps at Partner and figure out what's going on in the market that you currently work in and try to get some lists of people to find that need to retrofit. I saw it very successful by some Chase reps on the seismic retrofitting on soft structure in LA a couple of years ago.
Yeah, and another one too is the balcony bill. So SB 721 in California, again, it's not really owner user, but multifamily owners are required to do these assessments of their balconies following that balcony collapse in Berkeley a few years back. And so a lot of owners are saying, well, how do I get the capital to do the repairs and fixes, right? Like, I got to raise the money to be able to even meet the state's deadline. So that's another government mandated inspection requirement that is helpful for us. And then, real quick, all the car wash talk, this PFAS having to be part of the phase 1 process, right? Car washes have been targeted by regulators as a potential concern for PFAS. So it's going to be really interesting to see how all that shakes out on your phase 1s on these car washes. Like I mentioned previously, I don't think we're just going to start recommending phase 2s on every car wash, but certainly we're going to be paying more attention to how their wastewater is managed. So you want your operator